Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It was an interesting day to be a trader on Thursday as in early Asian trading, disappointing Chinese data sent most of the majors down against the US dollar as risk aversion took hold. But moving into late European and Asian and early North American trading, many of the majors regained most of their losses for the day after risk aversion settled. Now this leaves us in an interesting situation heading into Friday, the last day of the trading week, to see exactly where these pairs will flush out to end the day. What we're going to look at is there's three pairs that are interesting trading setups heading into Asian trading. The first is the Great Britain USD, then we have the New Zealand USD and the USDCAD. If we look at the Great Britain USD, you can see that the pair had moved down in a channel ever since moving up to test the highs of the week at 162.72 and followed this channel gradually lower until the pair hit the 161.70 level and drifted sideways. And then today in late New York trading, it pushed above the top of the descending channel. Now this leaves us heading into Asia. If the pair remains above this level, we could see a push higher back up towards the weekly highs around 162.72 to end the week. But if the cross moves back down below this trend level, we could easily see a push lower towards this descending trend line that had capped the price action over the last few months, currently around 161.15. What I would preferably look for would be a move back down towards a test of this trend line and then maybe a bounce back higher. That would be the ideal setup heading into Asia. The next pair we're going to take a look at is the New Zealand USD, because you can say the New Zealand USD fell. Even though their GDP numbers were better than expected yesterday, they fell after the release of the Chinese data and moved down once again to test the resistance zone that has contained the pair as of recently, between 82.20 and 81.84. As long as the pair remains above this 81.20 and 81.80 level, the bias is for a continued move higher, but resistance comes in at the 83 level and followed very closely by the 83.50 level, which is the weekly high. If we get a push above 83, we could find sellers layering in above this 83.50 level, and if we eventually pop above the 83.50 level, though, we could be on a move 80 all the way up to the 84.70 level. But I would consider this 83.50 and 83 level to be a resistance zone that could attract sellers, and we could continue to ping pong between these two levels, but a clear break at the 85 level will lead to a push higher. The last pair I just want to talk about briefly is the USDCAD, because you can see if we narrow this down a little bit, the pair had been riding this trend line higher throughout the majority of the week, and today, right at the end closing in New York, it managed to push below, but hasn't really gained any momentum. It'll be interesting to watch this zone right here. If the pair moves down, breaks down lower, breaks below the daily low, is probably about 10-15 pips below that, we could be in for a new trend shift lower, and we could see a push back towards the descending trend line that comes around 96.75 initially. But if we break above this trend line once again, we could see the continued slow grind higher towards the 98.40. And with this pair, as always, you have to watch oil prices to get an indication of the possible direction of the cross. As for data tonight, the data is relatively weak. There's a little bit of USD-CAD data in early New York trading tomorrow, but we'll cover that then. All right, traders, everybody have a great weekend. This is Chris Keene from A Keen Point of View, and this is Currency Watch.